Good evening, ladies and gentlemen. This is Barry Norman on behalf of VTX, and welcome to our class on building your foundations. And tonight we're going to be looking at understanding charts. Now, before we get started, ETX is a regulated provider, so I'm therefore required to give you a risk warning. Trading in the financial markets can result in the loss of the amount invested. Do not trade with funds that you cannot afford to lose, and seek advice if you do not understand the risk. All information is provided in this webinar for educational purposes only. ETX Capital and the presenter are not financial or investment advisors, and we do not recommend any securities or instruments of any kind. Any instruments we look at tonight are for educational purposes only. Now, for those of you that are joining us through the internet and don't know much about ETX, we are a fast-growing financial services company based in London. We are authorized and regulated by the FCA, the Financial Conduct Authority. And up until recently, binary options were not a regulated product, but they came under the auspices of the FCA January, just this month. And so now they are completely regulated also. And on top of that, ETX is a member firm of the London Stock Exchange. When you trade with ETX, you can start out with our binary options platform that'll help you learn how the markets work and how assets move. Because when you trade binary options, your risk is only the dollar amount you type in the screen. So there's no leverage and there's no margin, and the complexity of the trade is a lot easier. Once you have a grasp on how assets move and why the markets respond, you can move over to our ETX Pro platform, which is our online platform, which is one of the best and leading platforms in the world. And then if you want a very professional environment, you can download our MT4 platform. It's up to you. You can use one of them, all of them, none of them. You decide what fits your trading style and your needs. So tonight we're going to be talking about charts. Now, learning how to read a Forex chart is considered to be somewhat of a science. They look complicated at first glance. Forex charts can look drastically different depending on the options you use. Charts usually have settings for display styles and price and time frame that you want to view. Time frames can be viewed anywhere from, say, 1 second to 10 years, depending on the charting system. Price can usually be displayed as a candlestick, a line chart, or a bar chart. Now, the thing is, any trader, no matter how you're going to trade, needs to be able to learn how to read a chart. You should be able to look at a chart and tell a whole story about how an asset's been moving over the last day, the last week, the last month. Okay, without any technical indicators, without any other thing, you should be able to tell a story of an asset. So if you just think of it as building your roadmap. So when you start building this map, you have to put the major highways on first in the big cities, and then you can put on all the details in between. Now, charts come in 3 different types of displays. And we're going to talk about candlesticks quickly because most Forex traders and most online Forex traders and most novices all want to trade by candlesticks. It's a buzzword of the market today. And the fact is, candlesticks are a great way to trade, except they are not about the reds and the greens on a chart. There are 32 different patterns of candlesticks and that are displayed on the chart, and you have to know all of these 32 different patterns. You have to be able to understand what they're trying to tell you and know how to use candlesticks. So too many traders get stuck in the reds and the greens and think lots of red means going down, lots of greens say you're going to trade it to go up. Unfortunately, that's a fallacy. Now, we have a whole bunch of classes on candlesticks, and we'll teach you how to learn the patterns, how to understand the different size and shape of the bodies. And once you've learned them, then they're a very good tool to use. But price can be displayed as a line chart. A line chart is the bare basics of them all. It doesn't give you much information. You can only kind of see how the price is moving. And then another way to display price is by using a bar chart. Now, a bar chart is very similar to candlestick, except it doesn't have colors. Both candlesticks and bar charts show the open, the high, the low, and the close. So therefore, we have three major categories of charts. Okay. Now, under this, there are all types of different variations. And if you want to be a specialist and master of one of these weird variations, you're welcome to it. There's lots of, like I said, all variations of these three charts. But once you understand your chart or pick your charting type, and the nice thing today is about with all the HTML5 charts and Java charts, you can bounce from candlesticks to bar charts, candlestick to bar, by just clicking a button. Okay. But the more detail you put on the chart, the more likely you're not going to get lost. And the thing about charting is charting allows you to get hands-on. And this helps you learn the personality of the asset you're dealing with. So as you can see here, this is a bare basic line chart. Now what we're looking at is we're looking at the Euro US dollar on a 30-minute chart. Now 30 minutes is the time frame. That means in this case on a line chart, we put one dot on the chart at the close of every 30-minute period, and we connect those lines together. And all we have is the close. So we get a visual representation without any detail. And then we come to a bar chart. And as I said before, a bar chart is my favorite. Now we're looking at the same asset, the same time period, the same everything. Okay. Now you can see a whole bunch difference between the line chart and the bar chart, because the bar chart starts to give you visual representation of how price moved in that entire segment. So here we're looking at a 30-minute time frame, and we're getting to see exactly how price moved in that 30-minute period. And you see detail. You see prices that are in common. You see opens and closes that were in common. You can actually see price channels or trends. You can see here a price gap. Okay, all of these you didn't notice on the line chart, which showed the same detail, because the price is the price is the price. It doesn't ever change. Okay, it's just how the data is displayed. And now on a bar chart, we get 4 pieces of information, well, 4 pieces of data, and some more information. So a bar chart is sometimes referred to as an OHLC, open, high, low, and close. So to put a bar on each chart at each time segment, we would put a doohickey, I call it a doohickey or a dash to the left, at the open of that period. So since we're looking at a 30-minute chart, it's the beginning of that 30-minute period, we put a dash to the left. At the close, or 30 minutes, exactly 30 minutes later, the close of that period, we put a dash to the right. We then go back and put a dot at the highest point that asset traded and a lowest point as that asset traded, and we connect them together with a line. And this gives us a bar. So we see 4 pieces of information: the open, the high, the low, and the close. But we get a little bit more information. If we step up the ladder from the open to the close, we have a bullish signal. That tells us the bulls were in control during that period. If we step down the ladder from the open to the close, that's a bearish signal, and it's telling us the bears were in control of that market segment, or for that, in this case, 30-minute time period. Now, as you can see on this next slide, we have candlesticks. Same Euro US dollar, same time frame, same everything. Now, you can see some similarity in price movement between the bar chart and the candlestick chart. So in other words, we see the same price. We see the gap here, which we didn't see on line chart. We can see the common channel built right here using the highs and the lows. And we can also see all these prices in common moving sideways. But we see lots of reds and greens. And unfortunately, this is not about the reds and greens. Candlesticks are all about the body of the candle and what's called the wicks. And it's about how one candle sits and then how the next candle, the preceding candle, is in relationship to the post candle. So we have candlesticks, as you can see here, with long, what we call wicks or shadows, and no bodies. Here, so this is what candlesticks are all about, and they give you a lot more information if you know how to read it. So they can be a great tool if you master it. But you can flip back and forth from candlesticks to bar charts. Like I said, my personal preference is the bar chart. Now, let me take you over to some live charts, and I'll show you this in the live real world. So let me pop them up on our screen here. And we're going to look at them on the ETX Trader Pro platform. So right now we are on the new Trader Pro platform, and if you want, you can go log in yourself and see this. Now, our charts are very, very nice because they have lots of features and advantages to them. They do this, they have all three the same thing: bar chart, line chart, and candlestick chart. But you can make them bigger or smaller to fit how you want. You can detach them. You can make them, cover your whole screen. You can pop them out. You can save them. But very easily here again, we can switch between a line chart, which is just the bare line, and what we call HLOC, which is high, low, open, and close, which is your bar chart. Now, you can decide which you want to use on your own. But the charts, if you're using private charts, you're using the charts on our session, on the ETX Pro platform, doesn't matter where you are. The new charts on our new ETX Pro platform are exceptional. You can print, you can save, you can do whatever you want to do. They have tons of indicators, tons of oscillators, tons of technical analysis right there on your platform. And you can have many charts open at one time. You just click on all the assets you want to have open, and you can have several assets, a whole line of assets open right behind each other, and you can trade right on the charts. And you have all the indicators and oscillators, but we'll go back and talk about these in a minute. So we have the three types of charts, or here we're using trading view charts. You can see they're very similar to the charts on the ETX Pro platform. And we can bounce very easily from a bar chart to a candlestick chart to a line chart. And like I said, you can see all the other choices. They're all just variations of the same thing. There are some weird charts. This is, I can't get this because I'm not logged in to my private account. Okay. So this is, these are all just weird variations. You want to learn how to use them, that's fine. I have no idea what or how, because I don't use any of them. Now, when I started trading, we did charting by hand, which means you sat there with graph paper and you were writing each one of these lines on a chart. And that was time consuming. So most people didn't use candlesticks because it required you to draw this candle, color it in. And in fact, in those days, candlesticks were black and white. Today, they're reds and greens, same thing, just a bullish color and a bearish color. But it was too time consuming to draw the candlesticks. Maybe if you're an artist, you want to draw them. So all of us use bar charts. And we would sit there with our graph paper and we'd have big binders with our charts and charts and charts and pages and pages and pages of charts. Today, life is pretty easy. We have computerized charts, Java charts, everything that'll make it easy. So we can bounce back and forth from one to another. So once you've picked the chart style you want to use, You then have to learn a second part of charts, and that's what's called a time frame. And it's a little bit confusing to people because most people talk about like a 30-day moving average or a 10-day moving average. Okay. When you're using a 30-minute chart, it's really a 30-period moving average, okay, or a 10-period. Because if you're using a 30-minute chart, every 30 minutes you're putting a line on your chart or whatever for the price in that 30 minutes. So what we're looking at is the euro US dollar on a 1-day chart. That means at the beginning of each trading day, we put a line on the chart. And at the end of a trading day, we do the whole bar and we finish it. So each one of these lines represents an entire day. So this chart we're looking at is taking us all the way back to November of 2017. So we are seeing a lot of price movement, but we're seeing no detail. So if I take the same chart and move it back to a 1-hour chart, okay, each one of these lines covers the price movement for 1 hour. Now we see some shift in what we can see, because first of all, we can see it less of a period. We're only seeing back here until December because there's only so many days, so many lines you can get on your screen. And at 1 hour means you're getting 24 lines on a chart for each hour. So there's only so many lines we can put across. But time frame is very important because you're trading in short-term time frames. But looking at an asset in a longer-term time frame can give you a better understanding of how that asset is moving. So like now, if we put this to a shorter period, go to a 30-minute euro US dollar, what do we see? We see an asset that has been on a steady downtrend that had a slight recovery and then moved back down to its downtrend, correct? So we see the euro's been moving down. Something bounced it back up here. I don't know what happened. I haven't looked at the economics calendar. Maybe there's some economic data speech. Bounced it back up, but it came right back down to, and it came back to its old level. So we would say the euro is in a fairly strong downtrend. But is that the truth? Is that actually what is happening? If we were to go back and look at this in a 1-hour chart, we see it's in a short-term downtrend, but even the price it's currently holding is halfway through this uptrend, because we saw the euro trading up all the way to here. And so this could be just a slight adjustment and is seeking a new level, which would be about there. Okay. So would it be true to say that the euro is in a downtrend at the moment? It's in a downtrend on a 30-minute chart. It could be an adjustment on a longer-term chart, a 1-hour chart. And if we switch over to the 1-day chart, what do we see? That tells us a whole different story. We see a huge uptrend with a huge recovery for the euro, and a proper uptrend would have push and ease, push and ease, push and ease, push and ease. Okay. And push, ease, push, ease. So we see a long-term uptrend. So if you look at it in a longer period, we don't see a reversal, a reversal to a downtrend. We see just a retracement in a very strong uptrend. Now, one of the main reasons we want to learn how to use a chart is so that we can put technical analysis and analyze an asset. Because no matter how you're going to trade, what you're going to use for your trading decisions, the only way you can decide the actual price you want to enter the market, the price where you would be willing to put a stop loss or need to put a stop loss, what the swing of the market is to where you'd have to put that stop loss. And there's a difference between where you'd put it and where you have to put it. Okay, and that's a big trick. And then where you would want to test the markets as it moves up and down. And at what point would you want to exit the market? And you only get that on a chart. There's no other way that you know exactly where you want to enter. No matter what Apple says, Apple comes out and says iPhone soared over the Christmas holiday season much higher and sold more than they expected. So you expect Apple sales to go through the roof. Well, how do you know you want to enter the market? Maybe the market already anticipated Apple prices are too high already. Or maybe, it's just the beginning of the move and you want to stay in. Or maybe there's a support or resistance level, and you want to make sure it clears above that to see if the traders are going to believe in it. Or you want to see are there a lot of traders jumping into the market because that data was so good? Or do we have a very low volume of traders moving on that data, and maybe because it was predetermined or it wasn't as good as we thought it was? You're only going to get that on charts. And so the first reason you want to learn to use and read a chart is so that you can apply technical analysis and see trends, see price action, see chart patterns. Now, we've talked about the different kind of charts. We've talked about different time frames. And viewing an asset in multiple time frames can help you make solid decisions. Because again, if I realized that the euro was simply in a retracement and not reversing its trend as I saw in a short-term period, I might think differently about how I was going to trade. Because here I'd be worried. In fact, I'd be looking at this and I'd be saying, is the euro going to continue down or move into sideways congestion? But I wouldn't be selling the euro right now and I wouldn't be buying. But if I knew it was a retracement, I might say, you know what? I'm going to enter and buy this euro, as it moves back up through its retracement back to continue its uptrend. But without seeing a longer term, you would not have known that. Now, the modern charts are all the data is the same. The basics of a line chart, a bar chart, a candlestick chart are all the same. Indicators and oscillators are all the same. Now, what these charts have done is they've made using a huge variance or huge amount of indicators and oscillators very easy. And that's a dangerous thing. Because again, when I started trading, we did it all by hand. You developed one or two indicators to make your trading decisions. Today, because I can go up to my indicator line and add on a million different indicators, I'm all over the place. And people tend not to become an expert in any one of them. And they tend, my buddy just told me I should be using RSI. And then your other buddy tells you use stochastics. Another one says Bolin. And before you know it, you're putting 97 pieces of data on your chart. And a very good trading system, and sometimes you'll see these very complicated trading systems and all this stuff on a chart. Well, the fact is, it really doesn't help. Most algorithmic and computerized and robotic trading systems only use 2 or 3 different calculations. And so just, our modern charts have a lot of advantages, but they also have a disadvantage of offering you too much data. Now, every chart today is slightly different. You'll have to look and see where the indicators are, but they're always there. Okay. You'll have to look for the settings. Because the nice thing is about you can change your chart. If I wanted to make this chart today, now we're looking at a standard black bar chart. But if I wanted to change my settings and make it colored, okay, make my prices different, make it scale differently, okay, things like you can set time sessions. So you should always have it set in your home time session because that way everything should be set there. You can set up alerts on your charts. There's lots of things you can do. You can set up color themes. And even on the ETX Pro platform, you can pick black charts or white charts. You can pick all types of settings for your charts. So simply by going up to the top of our chart, and here we've broken them. You can very quickly put on your most recent indicators. It stores them for you, or you can save your chart setups and use that over and over and over again. So we've separated your drawing tools under just a pencil. we put the different chart, look under chart. Then you see here, we have Barry's template. I can, you can save your template. So whatever you want to use, you can have as many as you prefer. And you can do whatever you want to do with your charts here, change your time frame. And also we have every indicator and oscillator you can imagine available to put on your charts. And when you click on them, it will give you the ability to set them up the way you want. So like here, we just dropped MACD on the bottom of the chart. We can verify the time periods. We can keep. So right now I have Bollinger Bands and pivot points on there, and it'll drop the pivot points right on your most recent chart, which are your support and resistance lines. And then here we have MACD, so I can decide what colors I want to use, everything right on your platform. So you don't need to use anybody else's charting service. You have the fastest feeds and the most useful data. You can change your themes, you can make it black charts, you can change anything you want on these charts, and you can save them, which makes life very, very easy. And so you don't, it used to be you had to go off and pay money to get decent charts, and because it's not really about the charts, it's more about the data feeds. Now you can get them right here and get the most advanced charts and get the fastest data feeds you can get. Okay, so they're great charts right here on our platform, and you can save them. Like I said, you can actually make them. You can save them right to your computer, so you can have them to work on afterwards. You can do anything you want to do with them. Okay. And if you're not sure about how to use the entire new ETX Pro platform, we have a class. I think we just had it. We have another one next week on a 1-hour class on the new platform, and you can learn how to use the entire new platform, not just the charts. Tonight we're here just about charts, but let's go back to my PowerPoint. Let's pick up a little bit more about charts. Okay, now Forex trading attracts many different types of traders with many different types of systems. If you want to trade a currency pair, it's best to become as familiar with it as possible. Viewing the currency pair in multiple time frames is part of a process of learning its personality. Understanding the currency pair's personality can help you in your success. What do I mean by that? If you're drawing your prices on charts, dealing with your charts and actually dealing with them, you'll start to feel how an asset's moving. You might see things like maybe you'll notice that gold between the Asian and the European session usually recovers if it's had a fall. Okay, there are certain times a day you'll start to feel it's time for that asset to move. You'll start to see the levels of support and resistance without having to go find what they are. You'll start to say, oh, at 120, 142, we're going to get some congestion. Okay, you'll get to understand your assets. But the best reason for learning how to read a chart is so that you can properly apply technical analysis. Now, not every trader believes in using technical analysis, but it can be useful, even if it's not your primary trading method. Technical analysis relies on the price that is on your chart that you are using. Now, here's where it gets kind of iffy. If you imagine your chart like a roadmap. Now, I was the kind of guy, I had a business partner for 35 years. Peter's from the UK, I was from the US. Now, whenever we were in the UK, he'd open up the glove box, and this is before GPS. He'd pull out a roadmap, and he could read that roadmap, and he'd get us everywhere we were going, and we would never get lost. If there was a traffic accident, he'd get us off the highway and get us around and get us on the side roads and get us around the roundabouts. And I'd be driving, he'd be saying, just take the third exit off the roundabout and go 2 kilometers and look for the stop sign. You see a gas station on the right, and we're going to make a right-hand turn, and we'd get right where we go. Well, reading a Forex chart isn't so much different than reading a roadmap, because after a while, you get to know what all the color codes are. You get to know what all the symbols are. And the thing about a chart is you can color and set it up. So I have my own little system. When I'm putting support and resistance, I'll use my strong support, or what I call eyeballing, in red. I'll use my pivot point lines in green. and I'll use other levels in blue, and I know exactly when I look at my chart what I'm looking at. And it will help you arrive where you're going successfully. So if you look at the chart, we were just looking at London, and then look at the price chart of natural gas, it doesn't look so much different, does it? Now, the thing about it is when you say the word technical analysis, a lot of people freak out. Well, basically, the definition of technical analysis is any analysis or anything you do on a chart. So there are three pieces of crucial information that everybody should be able to look at and put on their charts. And it's not really, it falls in the area of technical analysis. But the first is trend lines. And trend lines show the direction and strength of the current price movement. And trend lines also show the potential support and resistance of the trend and future support and resistance of the current price movement. Now, we have a whole class in this series of building your foundation on trends and trend lines. And there's a difference between a trend and a trend line. A trend is a movement, a direction, where a trend line is a line that's drawn on a chart that has very specific rules about it. And in that class, which I think is next Wednesday, you will teach you exactly what the rules are, how to properly apply trend line, because if you do it correctly, you're going to be drawing the same trend line everybody else around the world is drawing. And when you know what prices are important to everybody around the world, you can kind of figure out when you see the reaction at that specific price, you can see what everybody's doing. And therefore, knowing what everybody's doing can help you then apply your trading system. So we'll talk about that. But trend lines give you some basic pieces of information. And there's right and wrong ways of drawing trend lines, and it's very important you learn the right ways. Then we go on to support and resistance. Support and resistance are sometimes referred to as pivot points, but these are levels of movement up and down around the asset. These are prices around the current price of the asset where traders have either hemmed and hawed and as prices moving up, all of a sudden price stops and it stays at a price for a particular time, and then it might break right through and continue soar up from there, or it might fall off of it. This builds your levels of support and resistance. Now, after our third class in building your foundations is on support and resistance. And in that class, we'll teach you many different ways to come up with these crucial numbers. But to me, these are all the basics of using a chart, because too many people think charts, technical analysis is all about all that stuff down below, RSI, stochastics, Bollinger Bands, that complicated stuff. It isn't. But then we go over to one crucial piece of information about charts, and the only way you can do is on a chart, and it is what's called chart patterns. And chart patterns are crucially important. There are whole trading systems and whole ways to determine how price is moving. So let me pop you back up to the charts that I got set up. And we also have a class in trend patterns and chart patterns. So I've got some. So this is a very simple chart which has a beautiful price channel, and it's got the support and resistance lines drawn on there, and we can see how we would expect price to move. But now this is a clean, simple trading system, simply applying what's called a chart pattern. One of the most popular chart patterns is called a head and shoulders. If you learn, and we'll teach you how to see a head and shoulders pattern. And the fact is, all of this sounds a little bit complicated and time consuming is the biggest word. But today, there's all types of scanners that will just tell you when these patterns are developing and where they are. So and I'll show you where to get them. But you can set up, the assets you want to watch and set up the patterns you want to see, and it'll just alert you when this pattern and this asset is developing that pattern. And then you can go put it on your chart. But this is a very simple way to trade. from a simple chart pattern that you see on your charts. Here's another chart pattern. This is called triangles. Okay. And we will teach you about asymmetrical triangles, symmetrical triangles, and regular triangles, and there's formulas. So we could have predicted because what happens is a triangle just shows you prices moving into a congested area, and when it breaks out of that triangle, as it gets tighter and tighter together, it's either going to break up or down. But when it breaks out, there is a calculation that you can calculate how much momentum it will have in what direction. So here we can see it all pent up here, and it broke out at this point and released all of that momentum, and we could have predicted exactly how high that asset should have gone, okay, at that particular moment. And that would have given an excellent trade. And we'll teach you how to do that. And it's really the distance between the top and the bottom of the triangle. And there's a formula for it. And you would have been able to at least get in a trade when it broke out here and pick up all of those points between there when you have this beautiful pattern, this beautiful triangle developing on your charts. Okay. Again here, so you have falling wedges, ascending triangles, trading ranges, and they're all. So here we had a beautiful triangle, but we didn't get any momentum and breakout and went into congestion, and we're still expecting that asset to take off, but it hasn't. Okay. But again, we see down below here, we have volume, and volume tells you the story. Okay, you combine volume with no matter what system you're using, because that's going to tell you whether the other traders are jumping into the market or not. Do they believe in what's happening? So as we saw the triangle forming, we saw volume fairly low. Then as it broke out, you saw a lot of traders jumping the market. Volume went straight up, but they didn't stay in the market. Volume fell right down, so they didn't believe in that price movement. So you wouldn't have ever made that trade because you saw the volume petering out, and you didn't see price moving in the right direction, so you would have never entered that trade. So you would have stopped yourself from making a bad trade. But all this takes place on your charts. So this is a beginnings of building your basic foundations. Now, if you've never charted before, if you're just a person who thumbs through charts and doesn't spend any time at them, it's not a really good thing. You need to spend a little bit time. If you can get yourself more interested in the charts and reading the charts and less interested in trading, the more successful you be. The reward of doing good analysis on a chart, making strong decisions on a chart, is the reward of a positive trade. If you just go in there and make a trade without having any supporting data and didn't spend any time on it, yes, you get a reward, a financial reward, but you don't get any satisfaction. If you can spend your time working with your charts and getting to know these assets, it's like grooming a horse. You could go to a track and bet on lucky number 7 because it says it does really good in rain, or the horse's name is named after your kid, and so you bet on it. Well, yeah, you might have picked a winner, but you could have picked a loser. But what do you reward? You got to go up to the window and won it. But what about that trainer who's been training that horse for 3 years, spending all his effort, and that horse won? His reward is much bigger than your reward, not financial, his personal satisfaction. So my recommendation is, as we go through this 3-week course on building a foundation, pick one asset. I don't care what it is. If you want to watch Bitcoin, you want to watch Ripple, you want to watch gold, you want to watch the Australian dollar because you're going on to Australia vacation. Forget about looking for trading opportunities. Simply pick an asset that interests you. Start out with just the chart. Go through the different time frames and go through the bar chart, go through the line chart. Start looking for some things in common. Just get yourself familiar. Next week, we'll take that same chart that you're using and we'll start putting trend lines on there. We'll start looking at past trends. We'll start looking at previous. And actually, if you send them into customer support, I'll look at your charts. Okay. And then the last week, the week after that, we will then start looking for chart patterns, and we'll also put support and resistance on your individual charts. And before you know it, you'll grasp all this, because once you've done it, and once you have an understanding of how to do it, and your fingers know what to do, you'll find it's not complicated. It's just a matter of getting used to it. I remember when I was a kid, I mean, I learned to drive in an automatic, but most cars were still stick shift. And then when I was 17, I bought a new car. And I never thought to even ask whether it's automatic or stick. And I went to pick it up from the dealership, and it turns out a stick shift. I'd never driven a stick in my life. Well, the salesman taught me on the back lot how to drive that stick because I had to get to work. And I bounced it up and down the street and got it to work. But, within a month, I was able to upshift, downshift, make that car spin around upside down and backwards, because after a while, you just feel it. You know when to shift the gears, your feet know what to do. And that's what I'm saying. So this complex thing became habit, became easy. It was a no-brainer. And that is what you'll find will happen with your charts and your analysis once you put the effort into learning it. And practicing it and just trying it. It's not all that complicated. I'm not going to teach you anything that is very complicated. I'm going to teach you stuff that you can understand and figure out on your own how those assets should move. Because I believe everybody who trades should be making their own trading decision based on their own understanding and their own system, not some way that somebody's going to, when you see this, this, and this, do that. Because otherwise, you see this, this, and this, and this, but it's not always the same thing. And you need to know when it's not the right thing. And if you don't understand what you're doing, you won't see it when it's a bad signal. So on that note, I'm going to say goodbye to you. This class has been recorded. If you want to see a recorded version of this class, just use the same link you used for tonight's class. Otherwise, I'll see you next Tuesday and next Wednesday. We have 2 different classes on Tuesday and Wednesday. And we also have, I believe, a class next week on understanding and learning the whole new ETX Pro platform or trading platform. So make sure you come to that also. And thank you very much for supporting ETX. And have a very good night now. Bye.